Welcome. Back again for the CleanSpark and Bitcoin Friday update. We're going to take a look at the daily chart, the weekly chart, and then we're going to take a look at some short and long dated option interest. We'll talk a little bit about short-term price targets, and we're going to be adding trimming. What's my stance on that? And we might take a quick look at the general market overview after, just to wrap things up nicely. Okay, so looking at CleanSpark. Obviously, we've had this breakdown here. I know we were quite hopeful that this little pattern here was going to break to the upside, but the more it kind of pressured this trend line, the more it was obvious, especially coming into September being a typically negative month and all the bad sentiment. It wasn't too surprising that this volume shelf here broke, and we did have a very large air gap here, so we slammed down pretty hard to this historical support and this volume shelf. Now it's kind of holding at this one, but a drop below this one, the next kind of hesitation point would be this historical level here. Now I'm not sure that one would hold if we did get that low, mainly because it's kind of at the bottom of a low volume area, so I wouldn't be too shocked to see that one crumble and we head down to this kind of yellow area. That said, this is going to depend a lot what crypto does. We'll take a look at the Bitcoin chart after this. But for the most part, steal deal prices, guys. A lot of people are saying this is the end of miners. That is just not the case. The strong will survive, and I believe CleanSpark to be one of the stronger ones. Now, if we take a look where it's at from its low, that's still up 377%. So, can't really complain. I think we were close to 1,000% if we look back to the high here. Oh, way higher than I thought. So 1,200%. Are we shocked that it's having a pullback? Probably not. But historically, though, I've been trading in and out of this one for a while. I've been layering in, layering out, good take profits. And these candles here, if we kind of stretch it out a bit so you can see a bit easier. There's been some mega moves intraday on this one. Check this out. 22% in a day. If you didn't take profit on that day, I don't know what to tell you. These are very volatile assets. They will go up and they will go down just as fast as they go up. So if we take a look at the range for those that week, 46% in less than a week, guys. And if you didn't take profit, that's crazy to me. I've been doing that, and it's allowed me to add back in when it comes down and then take back out. Obviously, these gap fills are very hesitant points, so to see price stick in those areas is not really alarming. I've had some swing trades in separate accounts on this as well, so not just in my primary portfolio. You can check that out over on eToro. The link is in the description below. But for the most part, you should be. This chop is within reasonable bounds. If you're thinking it's the end of the world, it's not. These miners will pop back up. They're still doing pretty well, in my opinion. Other than that, though, technical wise, I'll put the wrong indicator on here. Give me a second. Sorry, I change my indicators a lot all the time. Okay. So the upside, obviously, we've got the measured move here is voided, so we can probably take that one off. That is no longer in play. I've done the wrong thing. Okay. So the measured move we're now working with is this one. So downside's looking good. It's only the start of September, so we probably haven't seen too much negative sentiment yet. It is also Friday, so I continue to slide. I'm not adding to this one currently until we get to this $789 area, mainly because I've been adding quite aggressively in this area and I'm already close to my 10% weighting and I have very little cash left aside, so I'm happy to wait for a little bit more drop there. That said, the TQQQ also looks good for a swing at this level. I'll probably post about that on eToro or Twitter, X, whatever you want to call it. But other than that, RSI, it is cold. So if it's going to bounce, it's got the ammo there. MACDX Plus, the death cross is pretty active. It's kind of separating again, so it doesn't look like it wants to cool off. And retail short-term traders are crushing this one. Flow, negative, not surprising. Keep an eye on that though. I'd like to see some pause in that. We are at the lows of the indicator, so a flattening would be nice to see here. Let's move on straight to the weekly though. looks a bit more ugly, but as you can see, it's not. If this was another stock trading in a fairly small range, this wouldn't be too alarming, technically. The downside here is 63%. But like I say, this stock and other miners and proxies will trade with a natural levy of between 2 and 5x of Bitcoin. So these moves should be expected. Bitcoin can make pretty drastic drops. 30%, 25, 30% is pretty common. So to 3x any of those drops gets you to about this level. So nothing too concerning here. I'm still confident in what's happening with Bitcoin, what's happening with these miners. They need to stay. Obviously, there's no Bitcoin without miners, so pick your winners. Some of the miners will go bust this cycle. They always do. I think there's a little bit of extra runway there for some of them, though, with the AI story. I've changed my mind a little bit about them after being on the NVIDIA call. But the business model's still not where I'd want it to be, so I've got some cautious positions open on those. But for the most part, on the weekly, we're cold here too on the RSI. Institutions are being flushed out with the short-term holds. The Golden Cross is pinching together, but it's still active, so definitely want to be seeing that not becoming a death cross here. And we had an aggressive drop in flow there. Okay, then moving on to CleanSpark open options interest. I know I've been saying for a while that options on CleanSpark are a terrible idea, but I'm actually starting to consider re-entering them. Prices just got so beat down. It's starting to look like a really good deal. I have to look at some of the numbers and stuff, but I'm kind of tempted. That doesn't mean I'm going to be entering any long contracts. Something shorter periods probably ideal. Obviously, the strikes here at $13 for the end of this week probably not going to happen. So as much as the resistance there is going to be strong, there's very little chance that we'll get to that level. But if we put it out a week, see what the market's thinking. So very bullish for the most part. A lot of people expecting price to go up. That doesn't necessarily mean it has to go up. What it means though is these will be good resistance levels. People will be taking profits and whatnot in these areas, and they have the right to do so. But the week after, $20. That seems rather ambitious, to be honest. But as well, though, there's a lot going on here. $30 definitely not happening. I'll tell you now. But out of curiosity, I'm just gonna have a look at January. So I think now people are expecting. Well, people now are very confident that Bitcoin's gonna do most of its pumping at the start of next year. So just want to see what the market's thinking about that. Okay. Yeah, pretty much in agreement by the looks of it. So definitely worth keeping an eye on. But like I say, I probably wouldn't enter any long dated contracts for CleanSpark just because timing is not ideal. But capturing some of this short term upside, maybe a 6-month contract or something. Well, probably less. I'll have a look, see what's out there. But definitely be interested in taking some in up to the kind of $14 range. Moving on to Bitcoin, I know that's the one everyone wants to talk about. So the chart is still looking kind of meh. It's in the middle of nowhere. It's not really going up or down. That said, though, if we do break below this, it looks like it's kind of holding for now. There's this big old air gap, and the next level is going to be this 51.7 kind of $1,000 area that we did wick down very fast to that last time and had an aggressive bounce up. So we know that's a strong level of support there. It does line up with some history here as well. So, but even if it does fall down to these levels, there's a lot of confluence here. We do have another air gap here, but we're still within a pretty decent trend. We're still up a lot over historic levels. If we zoom out a little bit here. So the low here, we're still up 125%. So can't be sniffed at. And we're not at the parabolic kind of stage yet. It doesn't always have to happen like it does historically, but I think the fundamental things happening around Bitcoin now should drive the price much higher. and as well the price needs to be higher for the miners to stay profitable. So this is definitely not the end of the cycle for anyone worried about this. This kind of stuff happens every time. These downside moves. The difference now is we've got these big funds in there that can, I don't want to say manipulate the price, but they move stuff around in a certain way. But other than that, though, my price target range kind of really hasn't changed for the peak anyway. I'm looking between 120,000 to 240. That doesn't necessarily mean there's levels I have to hit. I probably will be selling some of my stack, and what I do is I layer in and out. So I'll layer out as price moves up towards those prices, and then when it comes back down, I'll layer back in. Each cycle is going to be diminishing returns, so take your money where you can. I'm not going to just sit on this. I'm too impatient to wait 4 years for the things to move again. Probably start adding back to it. Start layering in 2 years after the 1 year after the peak. Sorry. Tend to work more on timelines for this. I agree with the fundamental uses of Bitcoin, but I still want to take advantage of the technical side of the charts here. So the RSI is kind of boring. We've got the death cross incoming. It looks like it wants to pop lower, so that's probably going to confirm institutions are fading out and the short-term holds are in. And flow is quite bad as well there. Let's take a quick look at the weekly. Zoom the wrong way. Okay, so it doesn't look as bad if we zoom out and look at big picture. This is a perfectly reasonable trend here. I think if we do come to an area where we break below this purple line, some people are really going to flip their biscuits, but that can't really be helped. I don't imagine we'll go that low. That seems crazy to me. I would expect this kind of 50k area to hold. If it doesn't, though, I will be selling my kidneys to buy more. But on the weekly, the RSI is kind of neutral, so meh again. The golden cross is still prevalent, so it looks much healthier. The institutions slipped a bit, but they're still over 50%, so the long terms are holding in there, which I love to see. And then flow is kind of neutral, negative, so not much concerning there. For me, I don't trade in and out of Bitcoin in this kind of chop. I'm more adding to it under this bull market band as well. So I don't kind of layer in and out the same as I do as my normal stock positions or my Bitcoin proxies. I just accumulate during the run-up phase, and then after the peak, up to the peak, I kind of layer out a little bit and then repeat the cycle over again. So for me, I'm still accumulating. We're under the bull market band before a parabolic move, so that's all good for me. One thing I did want to talk about was the CleanSpark dilution rumors. I've seen a lot of this going around, and here is the actual notice of special meeting on the screen here. It's not actually a dilution, and it's kind of confusing that it's in a way they're asking for permission from shareholders to be able to bring more dilution later down the line. Now, they've done this before. All the miners do it. All companies do it, in fact. Currently, their authorized share count is the 300 million cap, and their current float is 228. So we're still under the current cap. However, the cap that they want to raise is 600 million, I believe. I don't think that they would reach that level, but primarily companies do this so they've got the ability to raise cash much quicker than they would by having to wait to vote on it at a later date. Now, the worry here is that it's such a large lift, and also their kind of rhetoric around it. They've been quite aggressive. I think some of the notes in the paperwork here, I'm trying to find it. The statement says, if we fail to obtain stockholder approval of this proposal at the special meeting, we intend to continue to seek to obtain stockholder approval at each subsequent annual meeting of stockholders and or special meeting of stockholders until such approval is attained. Now, as a stockholder, I don't like the way they've worded that. It's almost a threat. I don't mind the dilution, and I know they're going to need to dilute. They always will. It's just how the miners work. It's how they raise capital. But I don't like the tone they've taken with it. They're kind of backing shareholders into a corner. If you don't pass this, we'll just keep bringing it. But that said, on my website at thecraftytrader.com, I did put a blog post on there about this, just talking a bit about the dilution and why they do it and the growth and stuff that comes with it. All of the companies do it. Yes, CleanSpark have diluted a little bit more than Mara, Bitfarms, Riot, but they've also expanded a lot more. Their hash rate's grown at a much faster clip. So they're using that extra capital in a very positive way, which is what you want to see. The concern is that they dilute and they don't grow and expand. And as well, I think a lot of the plans to get the hash rate up, it's predominantly paid for the ASICs and whatnot, but they just haven't got them up and running yet, and that's going to take time. They're on track to do so, so I expect their hash rate to lift up consistently over the coming months. But yeah, I think it's a bit of an overreaction. I have been buying off this news. This is probably why CleanSpark is leading the drop in miners. Just people on X especially have been saying stuff like they're diluting us 100%. It's factually not true. This is just a kind of vote to ask permission to dilute at a later date. That doesn't mean it would all hit at once. They tend to dilute slowly over time. It's just something to be aware of. I'll put on the screen as well the share dilution over time, just so you can see it. Let's take a look at yesterday's data. We got a lot of jobs data out. It's interesting to say the least. Okay, let's jump straight into the Challenger job cuts here. So they came in lower than forecast, but ticking up again after a low. I say ticking. This is actually quite a considerable jump here. Hopefully this is some of the PayPal staff, because they're running a bit bloated. They can afford to shed some weight, but for the most part, it does look like it's come from tech. I'm not really surprised there. But again, these cuts are bullish for rate cuts, but there's definitely some weakness coming in here. Next, we've got the ADP employment change. These numbers tend to be pretty okay. They're direct from payroll, so you can't really argue too much with them. I mean, they did have a revision by about 11,000, I think. So it's quite a decent revision there for the month prior. But this was the weakest read since January 2021. Most of the hit was to small businesses. Medium and large actually grew a little bit, so rates have been high for a while. Small businesses struggled. My small business, well, we closed, margins got ate up, but that was a long time ago. If we'd have struggled through now, we'd been in a bit of a mess. So I'm really glad we decided to get out of that. But what else can we look at? Oh, and I did want to point out in those numbers, though, if we go forwards again, that year-over-year pay gains were flat, remaining at 4.8% for job stayers and 7.3% for job changers. So if you've been in a company for 2-3 years, chances are you'll get a much better pay rise if you go to another company. That said, I've been at the same company for 11 years, but I have moved around within teams, so there's been some wiggle room there. So maybe if you've been there a while and you want a little bit of a pay rise, you can look internally within your company, or you can wander out a little bit. Most of the jobs here were added in the services sector as well, so that's good to know. Hopefully that's a little bit protected. That's the kind of sector area that we really want to keep going. Manufacturing is not too much of a concern. That's been in a recession for a while. I think if Trump becomes the president again, then he will try to bring a lot of manufacturing back to the US. So maybe in that scenario it's worth a look, but for the most part it's dying. Tech also took a little hit as well. Other than that, though, we've got this little batch of jobless claims data, initial, continuing, jobless. They all came pretty much bang on, which is suspicious, to say the least, especially with the size of the cuts we're getting and the reduction in numbers added. So either those numbers are wrong or these numbers are wrong, and my inclination is these ones are probably being fudged. We'll probably get some sort of revision on them, but something's definitely off. We've got more jobs data today, so we'll see. But other than that, though, we had the services PMI data here. and the global composite. These all came pretty much in line. So 54 against 54, 55 against 55. I mean, there's a little bit of niggly room, but barely anything. If we just scroll down, we're looking pretty Goldilocks for most of these. Looking pretty good. The only other data out on this day was the Fed balance sheet, which when it loads, so runoff continues. So not quite getting some QE on there yet, but it's heading in the right direction. So for the most part, something quite off about some of this jobs data. Hopefully the data today will shine some light on it. So today, before market open, we've got the non-farm payroll, the unemployment rate. These are the major bad boys. I don't know if I'm excited or nervous on this one, to be honest, but we shall see. If we take a quick look here, non-farm payroll has been not great. Unemployment rate's going up, and it had a big jump last time. So if it goes up a big amount this time again, we're going to be getting into the danger zone, I think. So we'll see. We've also got a couple of little bits out: government payrolls, manufacturing payrolls. Not too interested in that. More speeches, total vehicle sales. So I think all the action pre-market today. So watch out for that. If you found this content at all useful, give me a like, share this with your buddies, and subscribe to my channel. I post 4 videos a week at minimum. I'm trying to do more. I'm trying to do more fundamental stuff as well. So watch out for that. And hopefully I'll see you next week.